Today I wanted to share with you a quick win we had for one of our clients. Now, this client approached us a few months back with a very clear brief of wanting to buy her first home, knowing that she'd need a budget of approximately $600,000 to $650,000 to go ahead with the purchase. When we first spoke, her borrowing capacity wasn't quite where it needed to be. We had two options. One, wait until circumstances changed. Now that could be anything from a pay rise, interest rates dropping, or any changes in policy that would make it easier to get into the market. Or two, proceed right away with a non-bank lender. This would allow her to get into the market sooner, but the price would be a little bit higher. At the time, she was in no rush, so we decided to wait and see if any changes would come along that would help her get into this property. Fortunately for her, the changes we needed came into place sooner than expected. One of the major banks that we work with changed how they approach HECS debt. Now, if you will be paying off your HECS debt within 1 to 5 years of the time you're applying for the loan, they will now look at this more favorably. As soon as this policy came in, we let her know and we reran the numbers. Prior to these changes, her borrowing capacity was approximately $480,000, which only allowed her a purchase price of $550,000 to $600,000. When we reran the numbers last week, her borrowing capacity was up to $575,000, which allowed her a purchase price of closer to $660,000. We received that pre-approval for $575,000 today, and she's now ready to go into the market, look for the property that she actually wants. If you or anyone you know has HECS debt that's getting in the way of your borrowing capacity, please reach out.